Namaskaram. So we are continuing with DTAA. We have already completed section 90 and 90A. Section 90 talks about agreement between two countries and section 90A talks about agreement between two specified associations. But both the sections are focused on bilateral relief. Okay, bilateral relief means two countries will come together and they will try to solve the problem, maybe by giving you exemption method or credit method. So they can adopt one of the method that is almost theoretical in the law, which is already covered. The most practical section or the practical question which comes in exam are from section 91 when there is no DTAA, and mark this section most important section of your syllabus. It will definitely be targeting exam, and from DTAA chapters most of the questions are based on section 91 called unilateral relief. Look at this. In case income arising to an assessee in a countries with which India does not have double taxation agreement. Obviously, when you don't have double taxation agreement, you cannot expect foreign country to cooperate with you. Relief would be granted under section 91 provided all the following conditions are satisfied. So you need to write this condition as a note whenever question on section 91 comes. Therefore, try to remember this, try to buy this condition. The assessee is the resident in India. Obviously, unilateral relief you are not going to give to foreign nationals. You are going to provide to Indian resident. So, he should be resident in India during the previous year in respect of which the income is taxable. The income accrues or arises to him outside India. Obviously, if income is accrued or arise in India or deemed to be accrued in India, then it is Indian income. We are not supposed to give you relief. The source and residence both are located in India, but right now the income is accrued outside India and you are resident of India, therefore there is a double taxation. The income is not deemed to be accrued or arise in India, same thing, the income in a question has been subjected to income tax in a foreign country in the hands of assessee. It's not only accrued outside India, you have also paid tax outside India. So obviously there is a tax consequence in the both country, therefore we are talking about relief. Because there is a pain of double taxation, we are talking about relief. If there was no pain, we would not talk about relief. The assessee has paid tax on income in a foreign country. He has paid. It's not unpaid tax. He has definitely paid the tax. And there is no agreement for relief from a double taxation between India and the other country where income has accrued or arisen. Obviously, after complying, you can see that these are very general conditions, easy to remember. You must remember this condition. Then only the double taxation relief of section 91 can be activated. In such a case, the assessee shall be entitled to the deduction from Indian tax payable. So deduction will be given by Indian government from Indian tax payable, meaning thereby first you have to compute Indian tax. You compute the tax the way we compute the total income, compute the income under 5 heads, apply the clubbing provision, apply the set off and carry forward provision, compute the GTI, gross total income. From gross total income, provide all chapter 6A deduction. You will get a total income. Total income will have two components, special income, normal income. You apply special rates on special income, apply normal rates on normal income, compute the income tax, apply the surcharge if applicable, apply the health and education is applicable, and that's your gross tax liability. Meaning thereby you have to compute tax first of all, and then only we will talk about section 91 relief. Okay. The deduction would be sum calculated on such doubly taxed income. So we have to compute relief on doubly taxed income. Doubly taxed income, what I have told you earlier also, doubly taxed income, the nature of income or source of income will be common in India and outside India, but amount may not be the common, because in India computational mechanism is different and outside India computational mechanism of income can be different. Okay, we will discuss that to practical question. Indian tax rates or the rate of tax in the country whichever is lower. So if Indian tax rate is 20%, obviously average tax in India is 20%, and rate in foreign country on which average tax rate that you have paid tax is 18%. So relief we cannot give to 20%. Double taxation effect is only 18%. So to the extent of 18% we will give you the relief. So what if in foreign country you have paid tax 28%? Now beta, because in foreign country you have paid tax more than Indian average rate of tax, maximum relief that Indian government can grant you only 20%, because we are charging on an average 20% from you. How can you expect more relief from India when you have not paid tax in India? Yeah, if Indian tax rate is 40% on an average and outside India you have paid 30%, that's okay. Now we can provide whichever is lower as a relief. Therefore, please remember we will compute two average rate of tax. Average rate of tax in India average rate of tax outside India, and then we will take whichever is lower. That rate is the rate of relief. Please understand, which will be applied on doubly tax income computed in our question. At Indian income tax rate, if both the rates are equal. If both the rates are same, then Indian income tax rate. If both the rates are equal, then whether you take Indian rate or foreign rate, rates are equal. Okay. Sir, what do you mean by Indian rate of tax? Only income tax, or will it include surcharge and cess? So it will include surcharge and cess also. Indian rate of tax means the rate determined by dividing the amount of Indian income tax after deduction of any relief due under provisions of Income Tax Act, but before the deduction of any double tax relief due to the assessee. That means ignore the double tax relief and take all the possible relief, and then you compute the tax. According to that, you have to determine the Indian income tax. Similarly, we have to compute the foreign rate of tax. Once the foreign tax, please understand, foreign tax amount divided by foreign taxable income. Foreign tax amount divided by foreign taxable income is equal to the rate of tax in the foreign country. Rate of tax in the said country means income tax divided and super tax. Income tax, super tax means surcharge kind of tax actually paid in the country in accordance with the corresponding laws in force in the said country after deduction of all relief due, but before the deduction on account of double taxation relief due in the said country, divided by the whole amount of income assessed in the said country, not in India, assessed in the said country. The expression income tax in relation to any country includes excess profit tax. In that country, name of income tax may not be income tax, it might be excess profit tax or business profit tax. The name can be different. It's a nature of direct tax charged on the profit by the government of any part of that country or any local authority in that country. Okay. Sir, how do we compute relief? Ultimately, this is what you are supposed to remember. You have to compute tax on total income in India according to Indian income tax rates, divide by total income in India according to Indian income tax into such a doubly tax income. Please understand, this is the rate at which we are going to compute the relief. And doubly tax income, as I told you, which is taxable in India because you are a resident, and it was taxable outside India because source is located in the foreign country. Similarly, we have to compute tax on doubly tax income as per the average rate of tax of foreign country. So tax paid, not outstanding, tax paid in a foreign country divided by total income assessed in a foreign country according to law of foreign country into such a doubly tax income. So doubly tax income is a common factor that you can multiply later also. Whichever is lower is actually a relief. Yeah, whichever is lower is a relief. We will solve few practical questions to have understanding. Obviously, only by discussion of a theoretical provisions we will not understand application of 91. 91 we have to practice through question. Very easy provisions, my dear friend. You can see all the past examination question and you will have very good confidence to answer question if they target section 91 in your examination. Thank you.